Well, hello, everybody. Welcome back. Market Monday, July 10th, 2023. We are back with Tradeway TV. This is Market Monday. Had a couple of weeks off with holidays coming and going. Hopefully, everybody had a great time with their families out there. I know we're going to have some folks who've been with us many times right here on Market Monday. We got a lot of new friends out there, too. I've been talking to a lot of people around the country, letting them know, hey, we're live 6 p.m. Central right here on YouTube. Of course, some of you will be watching this recording from all over the world right here on Tradeway TV. But tonight, we're going to dive into a market update. It's a good week to do it. We've been doing a lot of market updates over the past couple of years, done a lot of different series, a lot of topical updates, specific things. But there's just a lot of economic change, a lot of pressure, a lot of data, a lot of things going on right now that are very, very unique. And we want to make sure that you have some information out there that helps you navigate this season well. Okay, so tonight, going to bring up the chart here, get back into a market update. Of course, as you're with us tonight, if you want to say hello, you want to ask a question, anything at all, right there, Facebook friends, YouTube friends, in the comments, you can pop that up there. I will take a look at that. If you just want to say hi, I'd love to hear from you. Let me know what where you're at right now, and I'll give you a shout out on here. I'd love to hear from you, as well as I said, if you have any questions, I would love to answer those for you as we are going along tonight. Market update. First thing we do, we're going to head on over to the indexes and just see where we're at. Now, we've got a 3-year view on there. Right now, I'm going to switch over to a 1-year daily view. Now, where we are here, this line is an old line there. We're back up into these highs. Okay, so technically speaking, this is what we've been saying this week. We are in a week where we've got big news on Wednesday. Some weeks, there's big news from Fed giving us an announcement. We've talked about that on here many times. This week, it's not a Fed announcement, but it's the thing that the Fed is most fixated on, and that would be CPI. CPI. So that's going to be our inflation reading for last month announced this month, okay? They are definitely looking to see that inflation level coming down. Ultimately, the Fed wants to see a 2% target, okay? We're pretty far from that right now, but they want to know, are we headed in the right direction? If we're headed in the right direction, the market will see the Fed start to talk about when they're going to pause interest rate hikes. I was just reading an article saying that for new homeowners, 7% on average is the new norm for a 30-year fixed rate mortgage. About 7% is the new norm, and houses are still across the country hitting record highs. They pulled back a little bit, but they're starting to advance higher and higher and higher again. Institutions are buying real estate like crazy, and you better believe people who are in their homes who may have otherwise wanted to sell them would have to turn around. They've been homeowners for a little while. They've purchased their homes at low interest rates, not 7%, not 6, not 5 even, not 4 even in many cases, but lower than that. And they don't want to sell their home to have to turn around and pay record prices and much higher interest rates. So they're hanging on. This is lowering inventory even more, driving prices up even more on top of those high interest rates. So interest rates affecting a lot of things. The Fed is definitely the hand at the lever, or the hand at the wheel, in terms of how we're controlling that. As traders, we're only looking at that because we want to be aware of when that news comes out so we can prepare for the volatility. As a trader, the thing that we really need to do, what's really our job, is to manage risk, right? It's to manage risk. The market is an opportunity for us as we manage risk. I was talking to a few people on the weekend in Jacksonville as they were just really learning what trading is and what it isn't for the very first time. And I feel like I want to say that right here tonight. There is an argument that people outside of the trading world, the investing world, that you can't do anything different than buying and holding stocks. It's not possible. It's not probable. It's not worth it. Don't do it. That's what they say. And they say it based on an argument that says you can't time the market. You can't time the market. In essence, you don't have a crystal ball, they say. So there's really no way to get ahead, right? But the reality is I actually agree with the statement that we cannot read the future. We can't read the future, right? That's actually not what trading is. So their argument against it is based on a misunderstanding of what we even say it is. Trading isn't about knowing the future. It's about managing yourself so that you can manage the risk around your money and take high probability setups, high probability trades. If we control ourselves, we can control our money. Can't control the direction of the stock market, but we can control our risk and take advantages that are available to us. Great opportunities that come up. This Wednesday will be that CPI report. So when we talk about news on here, right, we could come on here and we could look at it a couple of different ways and think, well, we're talking about news. That's news that's important to the trader. And maybe we could, land on a decision that says, well, if there's big news, then I guess I just shouldn't do anything. And part of the issue is that lately there's always big news, almost always some kind of news that comes in and shifts the market. CPI is a very big one. Okay. We don't know if that report is going to be in line with estimates. We don't know if it's going to be a big miss or it's going to be way better, right? We don't anticipate that it's going to be very far from what Wall Street says it will be. But the point for you and me is that we don't actually have to know what the market is going to do when big news is coming. So tonight I wanted to highlight, we've got news coming. I want you to be aware Wednesday, if you're in active trades right now, I've had this question come up recently. When the Fed makes an announcement on Wednesdays, right? They have their meetings on Wednesdays and the statement comes Wednesday afternoon. When they have that, should I get out of all my trades? Okay. Or if I see the CPI report is coming, should I get out of all my trades? It affects market tone being like the tide coming in or going out, right? It's moving one way or the other. Rising tides tends to raise all boats. That's what we look for. Is the market moving up more in its tone or down more? That doesn't mean every stock's going to go up. Doesn't mean every stock's going to go down when it's negative, but it has an effect on the momentum. And my answer is that if we've gone in, found good opportunities, set up our trades properly, having a plan, we know where we were going to get in, where we were going to sell at a profit, where we were going to exit for a small loss, keeping what we call positive risk return in place on a speculative directional trade, right? If we're looking at that, there are different ways to trade. We've looked at in our options series that we've done here on Market Monday. But if I'm just buying stock or I'm buying options for short-term trades, I want to make sure I have that plan in place. And if I do have that plan in place, it's not necessary that I go ahead, turn around and get out of all my trades or one trade for that matter, just because that event is coming. Now, what we do want to know, even though we cannot know the future, right? We could speculate about the CPI report all day long, but the reality is we don't know what the future is going to be or what that report is going to be or how the market's going to interpret that. What we do know is that it will be a higher volatility potential. So we want to manage risk accordingly. So for example, some people, I'm going to actually move over to the NASDAQ here for a second. Some people may go ahead and trigger a trade that they see, but they may do so with less capital risk than they would have on a week where there was not CPI. perhaps they're going to be much more scrutinous. Hey, that's an opportunity I would normally take, but this week it's not quite good enough. I'm not going to take risk. Some people will decide, you know what? I'm not trading at all. I'm not trading over Wednesday. I'll trade after Wednesday. Okay. Or I'll trade up to Tuesday afternoon, right? Something like I'm going to take my risk off the table, but I've planned the trade out with that in mind, okay? I'm not necessarily just going and getting out of everything just because news is coming. And you'll find with a lot of news happening in the market, you may be getting out of things all the time without actually allowing that pattern to run its course, which a lot of patterns have, despite the news, continue to run their course. So I wanted to highlight tonight some of those things before I'm going to say hello to a few folks who are lighting up the chat there. I want to highlight tonight. Those are a couple of things I want you to be aware of when we talk about news, because I can come on here and I do a market update and let you know, hey, these are the big news items. But it's not because we're trying to guess the direction of the market, right? We're gauging, and this is the job of the trader. We're gauging the level of risk that's present. When there's higher news volatility, that means that we have to choose to manage risk at a different level because those are unpredictable events. We don't talk about them because they're predictable events. We talk about them precisely because they are unpredictable events. Okay, and that's what makes them important. But we don't want to cross the wires and think that the reason we're talking about them is because somehow it will give us direction. Now, the Fed raising rates, the market has about a 90+% conviction, if I can use that word, that the Fed will raise rates again at the next meeting. So those kinds of things, you could say, well, we can have a very high probability of what the Fed's going to do at that next meeting, which doesn't come till later this month. But guess what? That's going to be priced into the market already. If traders are that confident that that's going to happen, it's going to be priced in already, right? So when you get into guessing what news is going to do, it can become very complex. You and I don't need to do that. We don't need to try to do that. All we want to do is, how am I growing in my skills to manage risk by finding great opportunities, not great guarantees, right? They're not great guarantees because there aren't any guarantees in trading, okay, in terms of knowing the direction. But there are skills that we grow in that give us the ability to manage the risk well, okay, and find those great trades, those great setups with great probabilities, and then control risk. So I've mentioned that a few times to drive that point home. Trading isn't about knowing what the market's going to do. It's about knowing what we're going to do, no matter what the market does. And if you can control yourself to do the thing you planned to do, then you can have a lot of power. You can be in a powerful driver's seat over a lot of other people in the markets, because that is really, really a huge, huge skill. Matt and Stephanie coming at us from Indiana tonight. Appreciate you guys being on here. Thank you so much for saying hi. Let's see. We've got Don joining us here. Happy to be here. Just did the first momentum class this weekend in Nashville. I was down in Jacksonville. Of course, a lot of excited people down there looking forward to their momentum class. And so I noticed actually that you were doing at one in Nashville as well. So, of course, some of our awesome coaches out there in Nashville doing that from Dyersburg, Tennessee. Hopefully you had an awesome time with the other coaches there, getting you started. We have events all around the country, folks, where people who are, this weekend, I met people who are proficient traders. They've been in the markets, and many people who knew absolutely nothing about the stock market outside of the fact that, maybe they'd heard the term Dow Jones and they have a 401k that they signed on the bottom of a piece of paper when they took a job, and that's the last they ever thought about it, right? That's the typical experience for a lot of people. And they come into the class and learn, hey, what is this skill set really? Not knowing the future. That's why I said that's that straw man argument. Oh, trading doesn't work. You can't know the future. It's not about knowing the future. This is what I tell people. I'll just say this because I brought it up. If you go into a casino, what do? Well, you gamble. you better believe that those games that are played in that casino, the casino is not leaving their business model up to chance. Okay. They have a very, very specific mathematical advantage so that over time they will win. This is the old saying we all know, the house always wins. Well, the house always wins because they've slanted the probabilities in their favor. They don't know any one hand of cards, any one game of whichever game, roulette, slot machines, doesn't matter what it is. They don't know any one game that they're going to win, but over time they're going to win. Now, I'm not even comparing us to a casino here. What I'm saying is, imagine somebody goes into the casino who understands probabilities and how to count cards. By the way, counting cards, it's not illegal. They will kick you out. They kick card counters, or advantaged players, they call them, out of casinos, right? And they cite them for trespassing. That's how they kick them out, actually. This is very interesting. Blair, where are you going with this? I'm telling you that when they recognize a player in their casino that has a real skill set, so much so that they shift the advantage away from the house and into one's own hands, they'll be so confident in that person's ability to do that to them, right? This is the house. They'll be so confident that this advantaged player will win that they won't even let them play anymore. So it's not just smoke and mirrors. It's an actual skill set. Now, that is a comparison to what we are actually doing in the stock market. Okay, now there's a lot more to what's going on in the stock market that we can use to our advantage. This is the amazing thing about what Wall Street has built for us here. Being able to open up a laptop and essentially have an at-home business with just a brokerage account and some skills that we're developing so that I can actually take an opportunity that's been right in front of me. I just didn't know how to take advantage of it, where I'm shifting those probabilities into my corner, right? So amazing, amazing, amazing stuff. That's what trading really is. And when we start to get a hold of that, we start to see that it's actually a learnable skill set. And that's really important. So appreciate you, Don, for diving right in. I know we got some other people. Jack is here from Toledo. We got some folks here tonight that are in a little bit different areas of the country, some places we don't always get to meet folks. So I'm really glad to have you guys on here. Let's see. Don said we had an awesome time. Definitely recommend it for beginners. So helpful, so encouraging. The practical, right? Show us how to do it, but also surround us with people that help us feel confident, help us feel covered. Okay, so that's really, really good. That's a special thing about our community. Joseph is saying if we don't increase supply, we will never be back down to 2%. So there's no question, inflation, CPI coming up, genie out of the bottle, right? It's hard to get it back in. It's hard to get it back in. And by the way, the reason the Fed is looking to continue to raise rates is because it's just not really moving down fast enough. Employment is not cooling down. Wage growth is not cooling down. It's still growing, meaning employers are having to raise wages so they can what? They can attract workers. There are so many jobs still. The economy is still very hot, right? If I can put it that way. They're trying to cool it, and that's not actually really happening yet. Now, I've mentioned this on here before. I won't go into this too much tonight. But the risk in the stock market, and if I just go to the chart here for a second, you'll notice this is what we call a double top, okay? Why do we call it a double top? Because it's topped out twice. Now, you notice right now it's going sideways, okay? So if I were to actually put some lines on this and go, well, what pattern am I really looking at right now? In the short term, I'm looking at that, okay? I've got a wedge, clearly. Now, that's an upward wedge. So the highs are the same, but the lows are getting higher, okay? So that's slightly bullish. we would look to see this get into this triangular part, which is what we call a squeeze point. I'm going to reset this, get a bigger view. A squeeze point to see which way is it going to break out. Now, of course, it doesn't have to move into that squeeze point, but that's what we're looking at right now. The market is at a spot where it's going to need a reason to push it above those levels that it's tried to move above twice now. So for you guys at home who are trading, for you guys at home who are just learning, let's watch, throughout this week to next week, depending on how long it takes, for that level there, which is about 15,270, right, on the NASDAQ. We go over to the S&P, it's a little bit different, I'm going to get rid of this box here. We still basically have a line right there, okay? But we're going, sideways here. Because as it's awaiting the the CPI announcement, it's a little bit flat. I have seen more so recently, the day before some of this big news, the market tends to take risk off the table. We see a little bit more selling going into big news, which just shows they're less confident of keeping risk on the table as some of these things come up. We'll see how that shapes out tomorrow. But again, if you're looking at trades, if you're in trades, you're looking at your trades, it's not to say that every trader has to go out and take all their positions off the table. Some of you guys will have a nice profit in something potentially, and you'll have had a plan to say, I'm taking that risk off before CPI even happens because I've actually got a pretty significant gain. Maybe not max target for the setup that you were doing, but you're getting closer, above 50% of target, 60% to target even. And so, you can say, all right, I'm going to take some of the risk off the table. That's part of the plan that you can have ahead of time when you are setting up your trades and planning through that when we've got big news items. Beyond that, we have to be aware it's not just on Wednesday. That's the CPI report. The PPI report is on Thursday. That will be significant as well. So it's a pretty stacked week of news when I throw in the mix that actually earnings season is going to kick off. Remember, publicly traded companies need to report earnings once per quarter. Banks will kick off their earnings season this Friday. We've got JP Morgan, Wells Fargo, BlackRock, Citigroup, big banks, not all of them, but most of the big players are in there to report earnings on how the banks are really doing. Now, here's the funny thing about earnings, guys, just to learn how this kind of works. They are lowering the estimates so considerably for a lot of these stocks that the chance of them actually beating the expectations are much higher. But that doesn't mean the earnings won't be down from this time last year or previous quarter, right? It can still move down and beat the estimates if the estimates are really low. So it's kind of a funny game in that way where they can make it look however they want it to look. Once again, for you and I as traders, not investors, traders, that doesn't really matter so much. It just helps me know, big financial earnings day on Friday. I want to be aware. That's one of the first jobs of the trader. Be aware of what is happening. Okay. We don't need all the noise. There's so much financial news. You don't need to follow every single little article. Financial news would love you to do that, but your time is precious. Don't waste it on them. Know the major news items that are coming up and ignore most the rest of it. I say most only because perhaps there may be something pertaining to a specific stock that you're getting into or something like that. But for the majority of time, they get paid to print news. And so they're just going to print a bunch of news. You and I don't need to use our time on that. We really want to focus on the big things. Fed, CPI, and of course, earnings always has an impact. But when you've got a day that has a lineup of banks like we have on Friday, no doubt that'll be something to anticipate. Again, doesn't mean we go out and buy bank stocks. Doesn't mean we go out and short bank stocks. Doesn't mean we try to guess the direction. That's not the point. The point is hey, Friday, banks, big earnings. Okay. volatility. Once you get into earnings season, you want to make sure any trade you're looking at, you're looking to see when is that earnings date, because that's a pretty significant thing. If your job as a trader is to manage risk, then one easy way to control that is to simply not trade a stock, an option on a particular stock, when it has earnings up to it, close to it, perhaps shortly after it, perhaps, but over it is something we don't do because there's just too much volatility. Do you know that it will go against you? You don't. But you do know that the volatility probability is so high, you get big gaps in the price. And that makes it hard to manage risk. For that reason, we avoid that. Okay. For that reason, we avoid that. So that's going to be a big thing. Looking specifically at the chart here, like I said, on the NASDAQ, I've got this guy right here. We're basically right at the bottom of that range, coming close, not quite to the 20-day twice now. I could even move this up a little bit, because you can see we're bouncing at an area that's not quite making it to the 20-day. Now, I know some traders will use a 21-day moving average as they sync it with certain other indicators that they use, but you'll notice that actually doesn't bring us any closer. That actually takes us further away from specifically hitting on the 20-day moving average. So we're moving up a little bit early on that. It'd be nice to see it move right into that. Over here on the S&P, we're still floating sideways, as I said, right? There's a little bit of a move up, but you notice here, I talked to some of our students this morning, you've got two different kinds of candlesticks. There's actually a lot of candlestick patterns that you and I can learn. In my opinion, there's some that are helpful to learn. It can be so many of the craziest, most complicated, and in my opinion, ridiculous names that somebody just thought of. And I don't see a lot of that being necessary for us to really learn how to read a chart well, having all these different candlestick patterns. That said, when you have a big red candlestick that goes down like this, right? That was a big red candle at one point, and it's gone all the way back up. Well, we call that a hammer. Looks like a hammer. Here's the handle. The hammer's at the top, right? So it's reversal indicator because the momentum shifted. Well, what happened the next day? The same thing in the opposite direction. That's classic indecision, right? They don't really want to push it too far of anywhere, even though we're into this resistance zone, this double top. It's not falling down and now back up. So for 3 days, we've pretty much ended in just about the exact same spot. That tells us they're just waiting on Wednesday. So that's something to keep in mind. I do think we're closer to a double top resistance point here. So, things could obviously go either way. I'm definitely staying conscious of the fact that 4450 on the SPX is a strong resistance point at this point. If we make it back up there, I'm definitely going to be watching for resistance in that level, which will really take us back to the same thing we're looking at for resistance here on the NASDAQ, right? It's right up there. You've got a reversal there, a reversal there. Here, a little bit bigger bounce. If this guy can move up into that 15,220 there, that's where I'll be looking for potential sellers to be coming back in. And if they don't, I want to see a clear breakout and a close above this line to have some confidence in continued momentum on the indexes. At that point, you can even go, well, breaking out here, pulling back into this level, and then showing me another follow through is yet even more conservative looking at movements in the indexes. Okay. This is our Monday market update. We're going to go in, we're going to look at the news, get a basic idea, but really we're short-term traders here. So we're really looking at the technicals of the chart more than anything. Of course, from here, we're going out and we're looking for certain technical patterns. We're understanding how to assess those patterns correctly, drawing good lines, identifying good targets, good stop out rules, good buy points, understanding how emotions affect that. All these different things come into play when you are actually in the process of being trained to be a trader. One of the other coaches said to me today, Blair, we build the trader before we build the trading. right? So we understand how important it is to do both. And that's what we do around here. Dawn, of course, chiming in the chat there, letting us know she was diving in head first, doing that in Tennessee this past weekend, getting to do just that, right? Learn the skills, but also get shaped so that you can go out, you can take advantage. Guys, simple things. I was thinking about this earlier today. This is the last thing I'll say. Simple things across the country for Americans to understand. How do I have a conversation with the person who's managing my retirement? What if I could actually manage some of that myself, right? I'm not saying go out and do that overnight tonight. I'm not saying that. I'm saying there are very simple financial instruments that you and I could go out and buy where we actually wouldn't even need a money manager. And in many cases, sometimes 95% of the time, they are actually the products that we get sold not outperforming the indexes that we could just go out and buy ourselves, right? Wall Street has hyper complicated things. Learning how to do that yourself, how do you take stocks that you own and make money on it month to month to month? It's a conservative strategy that any broker will give you when you open a stock account. It's not a complex, high risk option strategy. Most people don't know how to do that. How about buying insurance on your retirement? I spoke to a woman this weekend and I said that exact question. Well, how about buying insurance on your retirement? And I paused just to see her face, just to see what she said to me. And she kind of looked at me like, well, I mean, that'd be awesome, but and I said, well, you can do that. And she said, what? You can do that? Right? Anybody can do that. And the question is, how come Wall Street hasn't taught us how to do that? And, it's funny. I think about that. I go, all these instruments are available to the public to protect their money when people have been literally ruined in recessions. Okay. And yet there's this prevalent skepticism around going outside of the system that Wall Street has built and finding financial education. I'm thinking at the end of the day, I want to help equip folks just like you guys to have even some basic knowledge to protect yourself and augment, if I can say it that way, some of the things that you're doing in the markets or that you could be doing in the markets. And somehow the Wall Street system that doesn't serve many Americans very well, they're somehow the good guys, right? Well, we're trying to pull back the curtain from that a little bit and help folks understand some different things that they can do. So thank you for spending some time with us once again here on Market Monday. My name is Blair Nightingale. It's a pleasure to be with you guys. Of course, we'll be right into our programs tomorrow. If you haven't started with us, head on over tradeway.com and you can join up for an online step one, start your journey. We start from the very beginning. If you don't know anything about stock, if you're a more advanced trader, you can learn a system and get a community that comes around you and helps you grow and break through the next level in your trading. Trading, as you probably know, if I've got some longtime traders out there, is a lonely thing to do, right? It's a lonely thing to do. And a lot of people come to our events, come to our community because they want to connect, right? And we've certainly got ways to help you break into another level. So thank you guys for being here as well. Tradeway.com, and we will see you guys next Monday night for another Market Monday.